Good afternoon and welcome to MidCap Radar. I'm Reema Tendulkar and with me is Sonal Bhutra, and these are the top stories that we're tracking at 1:30 p.m. Stocks surge after a big upswing in US equities despite a worrying inflation print. IT and financials lead the charge while realty and industrials lag. Midcaps are relative underperformers.
Federal Bank reports strong Q2 performance as the bank reports beat on net profit and net interest income, while asset quality also improves.
Focus shifts to midcap IT now. Mindtree delivers an all-round beat in the second quarter. Brokerages Morgan Stanley, Nomura raise target prices. Science slips as revenues and margins miss estimates, although the company has maintained the guidance for FY23. L&T Infotech gains ahead of earnings tomorrow.
Angel One surges after posting record revenue in the second quarter. Anand Rathi Wealth too trades higher after a strong set of second quarter numbers. All right, those are the top headlines that we are tracking this Friday afternoon. Like the markets, Reema and I are also in the Friday mood, right? So we are looking forward to the weekend. But for now, as we talk about the markets, up in the green, there has been some selling from the top, but nothing to complain about. It's a 278-point rally on the Nifty. We have the mid-cap index, which is doing well as well. Three stocks in the favor of advances versus one in the favor of declines, and it is really the Bank Nifty which is working for the bulls today. So that index up 2%, sitting with gains of 830 points. So apart from the market cues, the global cues, also watching out for the weekend, Reema.
Absolutely. And you know, by the end of the week, this week neither belongs to the bears or the bulls, because the Nifty is absolutely flat. For the entire week. The mid-caps, though, have underperformed. The mid-cap index at the current juncture is likely to go home with a cut of close to about 1.5%. Hemain Kapadia of KR Choksi Securities is now joining in for a technical check on the market. Hemain, a pretty good rebound, largely sustained, but we're still within that trading band. How would you How would you view today's up move, and what's the future trajectory?
A very good afternoon to you, Reema. Thank you for having me. Like you said, a welcome rebound, and thank God it's Friday. But more importantly, like you pointed out, we still remain within the range. The broad range is between 16.8 and 17.4. Currently, the range is between 17,400 and 16,950. So, yes, despite everything, we still remain range bound. On the price side, we've been resilient vis-a-vis the world markets. The VIX has thankfully come down to sub 19. Sub 18, and then we become more confident of this sustaining, frankly speaking. The DXY is down, Reema. So, and I believe in the near term, there could be some more downside there. So, frankly speaking, we are in a happy space, but we need to take out 17,430 for this to fructify into an upside. We've been corrective for what, half a dozen weeks now. And now 17,430 needs to be taken out. So, till then, yes, we're positive, but this gap today is slightly disconcerting. Normally, gaps have a tendency to get covered up, Reema. So I believe in the next couple of days or next 3-4 trading sessions, there could be a little bit of pressure when the market tries to cover up the gap.
Okay. So that is about the market moves and the headline index as well. What about individual stocks?
Individual stocks, there are pockets of opportunities. Firstly, a buy call on Balkrishna Industries. Higher tops, higher bottoms on the daily chart. Oversold. Mechanical indicators have given a crossover buy. So a bounce is underway, which is going to get even slightly more potent now. So a buy on Balkrishna Industries at 1935, stop loss 1910, target of 1985. Secondly, going with IT, I think the way IT stocks have rebounded, I think the whole month, barring exceptions, IT index is expected to do well. So buy call on Intellect Design Arena. One can buy Intellect at 535, stop loss 520, target 565. Same logic, oversold, medium-term supports, positive divergences, indicator buys. And lastly, a buy call on Shriram Transport Finance Corporation. We're in an ascending triangle formation. We haven't broken out. The breakout actually comes in at 1220, but it seems set. So buy on Shriram Transport Finance at 1210, stop loss 1190, the target of 1250. It's a slightly modest target. If the market sustains, I believe it can be overshot.
Okay, all right. Thank you so much for joining us, taking us through your technical picks, and have a great weekend ahead. With that, we move on to our segment, Mid-Cap Movers. We have Vivek, as always, to take us through the mid-caps that are moving around in trade today. Hey, Vivek.
Hi, good afternoon. So a couple of interesting stocks on the radar. A few stocks from the aquaculture space today in focus. So some regional newspapers are reporting that a week ago, the Aqua Empowered Committee that was actually given control by the government in order to go ahead and give some indication as to the prices of shrimp feed, as well as, the recent price hikes. There were complaints made by farmers that this, was causing them quite a bit of pain, and which is why, some of the newspaper reports from regional newspapers are indicating that the price hikes that were taken as far as the shrimp feed is concerned has been ordered to roll back. And the other thing is that farm gate shrimp prices have been advised upwards. So, what analysts are indicating is that this could be a slightly negative outcome as far as, some of these players are concerned, given that this could actually mean that there could be some amount of control in terms of their pricing power. Moving ahead, some of the other stocks that we are tracking today, some of the stocks at fresh 52-week highs today are Kalyan Jewellers as well as RITES. Kalyan Jewellers continues its stellar rally the last month that we are seeing, and RITES on the back of some order wins today is perked up as well as, trading at a fresh 52-week high. Some of the stocks, that are trading with high volumes today, this auto ant name, JTEKT, is doing quite well in the session. Camlin Fine 2 has surged almost 10% on high volumes, and Sanghi Industries at the upper circuit. Remember, some of the mid-cap cement name continue to trade higher on the back of expected M&A buzz. On the other hand, Veranda Learning today is another stock that, if you're looking at, is cooled off a little bit from the high seen yesterday. BLS International, the stock actually has seen quite a bit of an intraday spike, so worth highlighting that as well. And Schaeffler India continues to trade downwards in today's trading session.
Okay, thank you very much for that. Let's get into a very short break. On the other side, we will be joined by the management of DLF Retail.
Welcome back. You're still tuned into Mid-Cap Radar on CNBC-TV18, and as we have been mentioning, markets in a fine fettle in the festive mode already. So let's discuss the festive trends now, and as promised, we move on to the next guest on our show, DLF Retail. We'll discuss the festive season trends and generally the company's business outlook in the retail segment. We have with us the ED of the retail business, Pushpa Bector, that is for DLF, joining us now to discuss that and a lot more. Ms. Bector, good afternoon. Thanks a lot for joining us, and festive greetings to you and your team as well. And since we are talking about festive trends, I wanted to understand from you, what are the festive trends looking like? How are the footfalls in the malls? And if we compare it with pre-COVID levels, where do they stand now?
Good afternoon and festive greetings to you and everyone at CNBC-TV18. Well, I can tell you that April to September itself, before festive, we had reached around 95% of footfall pre-COVID. And if I compare it to pre-COVID levels, and the sales, however, had reached around 125 to 130%. So October to December, in fact, I'll stretch it till January, we look at a very strong festive season. We are seeing the impact already in our properties. The buying during, I would say, non-sale period, fresh merchandise has improved quite a bit. And we think that, the footfall should be crossing pre-COVID levels now, and the sales should show overall another 20 to 25% jump.
This is for the full year or just purely for the festive season?
Yes, this will be for the festive season. I'm talking about October to December. Traditionally, also, when we look at this season, 60% of our annual sale happens in this season between the H2 quarter, October till around Feb is the strongest in retail. But this time around, we think it's going to be much better because of 2-3 reasons. Reason number one is that people have not had big occasions to celebrate the past 2.5 years, and in weddings have been intimate too. Now the big weddings are back, so occasion wear is increasing. The designers are going to do much better than what they did earlier. We're already seeing, trends towards that. It's a long wedding season ahead for us, always, I think almost till June. Beyond that, the festivities, we do think that this time around, the occasion wear is going to be pretty strong.
Okay.
Come November, December, we have been witnessing late winter, so winter merchandise also will pick up. So an overall positive outlook is what I see.
Okay, so you are saying that in the coming months, you will see footfalls crossing the pre-COVID levels, or at least reaching the pre-COVID levels, and revenues around 120% of pre-COVID levels, or you have already crossed that? Ms. Can you? Okay, all right. So that is about revenues, that is about footfalls. I wanted to understand what is happening with your expansion plans now. You have a couple of expansions in the retail business in place. The big Mall of India is also under construction. It is supposed to be the largest mall in the country as well. Tell us, where does it stand in terms of construction right now, or commencement? And when these additional malls come into place, what kind of revenues in the retail business are you looking at?
So I can tell you that, let's talk about the properties which are under construction. So we have a very, very good vertical, which we're calling the plazas. The plazas are going to be anchoring our very strong residential catchments, be it in phase 5, we're coming up with Summit Plaza, and in Capital Greens, in West Delhi, we're coming up with another plaza called the Midtown Plaza. So these two properties are already under construction. And these are 300 to 350,000 square feet GLA in size, and they will be answering the neighborhood requirements and anchoring our residential catchment. Beyond that, we also have city center malls. We already have, redone our Saket property, called it DLF Avenue Saket. We will be coming up with a similar property, much larger in scale, in Goa. And that's going to be a 650,000 square feet under construction property, which would be, another mall, which would be fully air-conditioned and catering to the requirements of the Goan people. Today, post-COVID, what we see is most of Delhi, Mumbai, Goa have got, people have got second homes. Some of them have shifted. We see people from Bangalore, Hyderabad, or Delhi and Mumbai. Quite a few good catchment developed within the city of Goa now, and that state of Goa, and that makes it extremely interesting for us as a catchment. So we are coming up with a property there.
Okay. What will be the overall, square footage which is under development?
So under development, under construction, I can say is almost, as I said, 380. These are two of them. Plus in Goa, so 1.5 million is under construction already. Okay. And then the ones which are under evaluation and approvals process, etc., a couple more, which we will talk about and unveil at the right time in terms of size and, all the other elements.
Okay, so you've spoken about Goa, you've spoken about shopping, you've spoken about festivals. I think that is everything that we all like. But just a number there, Ms. Bector. You spoke about how there are expansion plans in place. 167 crores in Q1 is what the mall business or the retail business did. Is it a run rate that you will continue, or with the festive trends that you spoke about, quarters from here on will get better? What is the average run rate you're looking at?
So I think, looking at the trends now, it's going to be, as I said, you can extrapolate. We would look at around 20 to 25% higher. And that has already been factored in, frankly, because we saw that the trends are positive at the start of the year. And we believe that it will be a strong retail year and we'll end with a good run rate. Of course, I'll not be able to divulge the exact number, albeit to say that it's a good 20-25% increase.
Thank you, Ms. Bector, for joining in. That is DLF Retail for you, sounding very optimistic. Things are looking up for them. Everyone is spending in full glory. But I guess this is what captures the upper end of, the more elite, the more rich people. It's not capturing the lower end of the spending. And so in that sense, you have to keep it in mind.
Oh, yes,
it's
absolutely.
not a full proxy for the economy.
It isn't. But good to see people going out after 2 years, right? And because last 2 years were not normal. So any sort of the excitement that we are seeing is something that is good. But of course, we'll keep that point in mind as well. But with that, we'll slip into a short break now. Before we do that, here's some great news for investors. You can now track US market.
Welcome back. Federal Bank is significantly higher in trade. It's a very strong performance from the bank. It's a beat in the net profit and net interest income, while the asset quality too has improved. Abhishek joins us with the fine print. Abhishek, the stock has now surged 5.5%.
Well, it's one of the best quarters that they have had in last 5 to 6 years. The return ratios are at 26 quarter high with ROA at 1.2% and ROE of 14.4%. Not to take away from the fact that, NII growth has been pretty robust, much ahead of our estimates. So, NII growth, we were estimating a 7.5% sequential growth, but it has come in at 9.8% growth on a sequential basis. The core fee income has also been pretty robust. It's grown to 535-40 crores versus 440 crores in the previous quarter. So core fee income growth is in line with the loan growth momentum that you are seeing. Now slippages that declined to 390 crore versus 463 crores in the previous quarter. Even the recovery and upgrades were on the higher side at around 330 crores when compared to 280 crores in the previous quarter. Write-offs remained elevated at 185 crores versus 163 crores in the previous quarter. So what this has meant is that the gross NPA ratio, which has come down to 2.46%, is perhaps one of the best in last 20 quarters. Although the fact that, provisions were on the higher side in this quarter, operating profits were pretty robust, growing at 40.2% YOY and about 24.5% sequentially. So overall, good set of numbers coming in on account of strong loan growth, strong net interest margin, and improvement in return ratios. Back to you.
Okay, all right, and the stock is surging in now, up 5.5%. Abhishek, thank you so much for joining us. But now focus shifts to mid-cap IT after the large cap earnings are out of the way. A host of mid-cap IT companies will be posting their quarter 2 earnings next week. We have L&T Infotech, which is gaining ahead of earnings tomorrow. A busy week ahead, Reema.
Absolutely. So let me just quickly tell our viewers all the mid-cap IT companies that are lined up next week in terms of earnings. So that calendar will come up for you. Tomorrow, it's L&T Infotech, but thereafter next week, we've got numbers from KPIT Tech, L&T Technology, Persistent, Coforge, Emphasis, Birla Soft. I guess by the end of it, mid-cap IT will also be done, right? We finished large-cap IT, mid-cap IT, after next week should also be completed. In terms of L&T Infotech, this is a stock which has done exceedingly well in the last 3 months, which means from its Q1 earnings to now, the stock has gained close to about 24%. Around the time of its Q1 numbers, the stock price was closer to 3,873, and now it's closer to 4,800. Dollar revenue growth seen at 2.6%. Constant currency revenue growth should be closer to 4%, which means a significant pickup compared to the growth that we had seen in the prior quarter, which was 2.9%. The company had indicated that revenue growth in the second quarter will be better than the first quarter, driven by the ramp up of deal wins and the digital spending by clients. Margins for the company seen up 40 basis points to 16.4%. But remember, this comes on the back of the 130 basis points decline seen in margins in the last quarter. What will we watch? The company had guided for large deal win closures in the current quarter and the outlook on BFSI. Because while, generally BFSI has been strong, but in cases like TCS's BFSI growth was lower than the company average. They spoke about some softness in insurance. And L&T Infotech gets a very large percentage of its revenues, the highest in the sector, from the BFSI space. So the client metrics appear to be deteriorating a tad bit. So is it impacting L&T Infotech? This is also one of the most expensive, mid-cap IT names. The valuation chart will come up. And here, this is FY24 PE is close to 28 times, while FY25 PE is close to about 23.5 times. I'm not saying FY23 because it's very, very expensive. But let's talk about 1 year forward and 2 year forward now.
Okay, so that is something we'll be watching out for. So busy week ahead for Reema again. But we'll take your leave on this edition of Mid-Cap Radar, your stocks when we return. Stay tuned to CNBC-TV18.